Thought it was worthwhile to do a little quick check on the state of things here in China. And looking out the window, it doesn't appear as though China has collapsed just yet. It's pretty amazing that it's been just about 4 months since we were all facing the snowballing effect of China's stock market decline, headlines everywhere. And at the same time, of course, the hand-wringing globally over the fact that China had yet to come out with any particular policies to address the ongoing softness, for lack of a better word, or real pressure that was quite evident here locally in the economy. Lots happened in 4 months, but most importantly, I think, is the fact that once again, as I title this video, the Harbingers of Doom, we've yet to see again a collapse of the Chinese economy. Now, maybe this time is different. You know, I've been here long enough where I can recall property taking down the market back in the year 2000, or the local government financing vehicles being the primary culprit to take down the economy beginning in 2013. And there's no question, these are structural issues that have finally come to the fore over the course of the last couple of years. But at the same time, what I think continues to be underappreciated is exactly what Chinese policy is looking to do to address these issues. And I would go so far as to actually say that there's a willingness by the Communist Party for pain. You're seeing this across the board. You're going to continue to probably see pain thresholds that will get tested. But at the same time, you're going to have policies such as last month's addressing the property market, where essentially all restrictions that had been in place on all major cities with regard to who could and couldn't buy property, those have been lifted. There's a lot of conversation right now for those in the know that even the idea of the hukou is going to be released as well. So there's, of course, going to be more policy coming out. Now, I do have to address the issue of the third plenum. We know this is coming up in about a month's time. There's going to be a lot of commentary, a lot of guessing on what that's going to mean. I'm going in with pretty low expectations. I think what we have seen over the course of the past 6, call it 8 months, is a very methodical approach, a recognition publicly. I believe that things like property, things like youth unemployment, and all of these structural issues, they have not gone unnoticed or unaddressed internally in Beijing. I think what we're now seeing is the outwardly addressing of those issues with regard to policy. The question with regard to the third plenum is, how might this ultimately move forward? I think even more structurally, if you will. And what I mean by that is the third plenum, as many of you probably are aware, is a system of looking at where China looks to plan over the next 5, even 10 years with regard to its economy. But we'll have to wait and see. Take, however, as my piece of advice today, any of the prognostications of what may or may not come out of the third plenum with a rather large grain of salt, be they good outlooks or poor outlooks. But what I do want to finish with right now is a reiteration of a comment that I made earlier this year, which is, regardless of what China will be doing, always remember that Keynes is dead. And I had some pushback, which makes sense. You saw that the policymakers issued this $1 trillion special purpose bond. But at the same time, it was issued over the course, or it's being issued, I should say, over the course of 6 months, roughly 40 to 50 billion per week, and not for a lack of demand. There's considerable demand for fixed income here locally. It's sort of the best horse in the race at the moment. But in terms of growing the fiscal position, in terms of blowing out the fiscal position, the Chinese will not, and I cannot stress this, will not follow along the path of the G7 nations. And if we look at this past weekend, I think that is a primary reason why what we witnessed in terms of the European elections and the outcomes has a lot to do with a system that is over-indebted, and the populace knows that it's having an impact directly on their bottom line. So we'll see how things play out, but China's still here. Nothing has changed, and I don't expect anything will change moving forward. What I'll be interested in is seeing if we get through the summer and then all of a sudden China becomes the most popular asset class in the final stretch of 2024. I have seen that before. Have a great day.